Is the housing market big shift here? Hey guys, it's Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome back to the channel. The past year has been a crazy one for real estate. Severe lack of inventory and record-breaking price appreciation has been the theme of this market. At every turn, every news outlet, every article you see, all they talk about is that prices are going higher, month over month, year over year. It's one of the major storylines over the last year. How well the residential real estate market performed. One key metric in the spotlight is home price appreciation. Let me share this with you before we go on to the big shift. According to the latest indices, home prices are skyrocketing this year. Here are the latest percentages showing year-over-year price increase home appreciation. The house price index from the Federal Housing Finance Agency up 18.8%. From Case-Shiller, up 18.6%. CoreLogic, up 18%. The dramatic increases are seen at every price point, and get this, in all parts of the country or all regions. Take a look at these graphs. Increases at every price point, like I mentioned. On the lower end of the market, prices are up over 22%. The middle of the market, up around 20%. The higher end also up 19%. Again, increases in every region. Check out this following graph. Now here's a breakdown of the top 20 metro areas. Phoenix, the biggest gainer so far at 29%. So that's what was happening. Everybody now wants to know what's in store for the foreseeable future. Are we starting to see a market shift? Pretty much everyone is worried or scared that we might be in a bubble that will eventually crash. Add to that the fact that we have a lot of outside forces that's bearing down on us. Things like the Delta variant, the economy, political uncertainty. All these things are weighing down heavy on would-be home buyers. Here's what I'm starting to see in my local market and also how my clients are reacting to these events. These things can be signaling that a shift is coming in the market, or maybe it's already here. One, there's an increase in inventory. The increase in inventory is not significant. As a matter of fact, it still does not meet the demand. Right now, the clients that I'm helping buy a house have they have a little more of a wait and see attitude because they're seeing properties coming on the market. On the flip side, the people that I'm helping sell their property, the offers that are coming in are not as aggressive anymore. No more releasing of contingencies up front, but the prices that we're getting are still good, but not the usual frenzy that we've seen. And this is not only here in my local market. According to the recent Realtor.com article, inventory rose 5.1% in the 50 biggest US metros that they track. Columbus, Ohio had the biggest increase in inventory, followed by Louisville, Kentucky, and then Cleveland. This is according to the newly released monthly housing report. If we're talking about a shifting market, this could be a precursor, if you will, to what might be in store for us in the near future. We've talked about needing inventory, needing something like 4 million units of housing in order for us to meet the demand. But what if that's not true? And what I mean by this is that what if we really don't need 4 million homes to come on the market for people to buy? And stay with me for a minute. This is my logic. Say for example, here in my market, I have a listing that's listed for $1 million. A couple of months ago, let's say that we get 15 offers. Now, I know from experience that with that many offers, there will be 2 offers that are head and shoulders above all other offers. Then probably 5 other offers that are slightly below that. And say another 3 that's right around the list price, and then the rest will be below list. I say about 50% will be able to buy a house, but the bottom 50% is the one that's iffy for me. And what I mean by this is that there's a lot of buyers out there that are not realistic or not aggressive enough or just plainly not listening to their agents. And these are the buyers that may never be able to buy a house. And I think this is how it is in the rest of the country as well. So that means that we really don't need 4 million housing units to come into the market. I mean, think about it. The inventory is going up right now. And if it really is, if it's really true that we're still not meeting demand, we should be closing a lot of transactions right now. But that's not the case according to the most recent National Association of Realtors pending sales index. Contract signings declined 1.8% in July, and year over year, it's actually down 8.5%. So if you still have a lot of buyers on the sideline, and then you have an increase in inventory, and we're talking about a slight increase in inventory here, isn't it logical that those inventories should be getting snapped up by buyers? That also means that the pending index or contract signings should be up, but it's not. And this is kind of my argument that the buyers that are left are really the ones that are not serious in buying or not realistic. I'll give you another example of buyers that are not really buyers. Usually how I know this is when I have a conversation with a buyer and it's about time to make an offer. I would tell them, for example, let's say there's 20 offers on the property, and they would respond to me that, do you think we can get the property for $10,000 below the list price? And no matter how you explain it to them, their mindset is, I will pay what I want to pay, and eventually I'll find a house. Well, guess what? 3 years later, I'll hear from them and they still haven't found the house, and they'll tell me I should have bought the house years ago when the prices were lower. I think these are the buyers that are out there, and there are a lot of them, and unfortunately, they are included in the count, which to me makes the numbers inflated. Now, another thing that might be signaling a shift is mortgage applications. According to the Mortgage Bankers Association, mortgage application volume has fallen to its lowest level since mid-July for the week ending September 3rd. This is what they have to say. MBA's Market Composite Index dropped 1.9% on a seasonally adjusted basis from last week and was down 3% unadjusted basis. The Refinance Index posted a 3% decrease from the previous week, and the Purchase Index dipped 0.2%. According to the report, mortgage applications to purchase a home were basically flat last week, falling 0.2% from 1 week earlier. Purchase application volume was 18% lower than the same week 1 year ago. 18%, that's a big number. What seems to be the issue is that home buyers today are seeing more inventory, but prices are still up. The result is that they are getting priced out. Again, this is one of those logical assumptions that I make. If inventory is going up and there are still a lot of buyers, mortgage purchase application should also be increasing and not going down. It seems to be that would-be buyers are really starting to feel the pinch, these higher prices, and are starting to have a wait-and-see attitude. If you've watched my other videos, you would be familiar with the following graphs that I've shared before. This one is my pending home sales graph. Take a look at the end with the red arrow. This is the pending home sales number going down. When you look at it and compare it to historical numbers, it actually doesn't look bad. It just looks like a small blip. I think right now, time will tell if this is really just a small blip or are we beginning to see a downward trend. The next graph that I have shared before is what we call the showing time data. This could also be one catalyst for the big shift. As you can see, since March, showings have been steadily declining. But again, to put that into context, we are still higher than where things were back in July of 2019, which we considered high back then. But to me, this looks more like a trend since it's been happening for 4 months now. It will be interesting to see the next couple of months, especially since heading into the fall season, we usually see things starts to slow down in real estate and then pick back up in early spring. Here's another graph that I've shared before, and it's the percentage of homes selling over list price. Again, in the news is that prices are going over list are declining. But if you look at this graph, the decline is not big, and it's also still much higher than where we were compared to July of 2020. So with the inventory going up, contract signings going down, and the number of showings declining, this last one, the list to price ratio going down, is this the shift? Is this the big shift that people have been warning us about? At the moment, it's hard to say definitely, especially because like I mentioned earlier, heading into the fall, real estate activity slows down. So there might be a mixture of seasonality in these numbers, and it will take a couple of months for us to determine that the shift indeed occurred or is occurring right now. The one thing that I haven't touched upon yet is interest rates. If mortgage interest rates really starts climbing and then you add an increase in inventory into the mix, that to me signals a slowdown. Right now, my gut feeling is that 60%, I feel like the shift has started, because of inventory in the list price ratio. If you're a buyer, any added inventory is a win. The same thing with price. Homes not going over list, no matter how small, again, that's a win. Just be careful that you don't wait too long and interest rates change and go higher, because whatever gains you might get on the side of price going down, that can be offset by higher interest rates and you still eventually pay higher. Hey, thanks for watching. If you liked the video, please like, share, and subscribe. If you don't like the video, why? Comment below. What do you guys think? Is the market shifting or is this just a blip? I'll see you in my next video.